So P ratio will only denote whether company is expensive or it is cheap. There may be a reason why the company is cheap. So all the cheap companies may not be good buy. Like we see land also, right? All the lands which are cheap may not be good for investment. At times expensive land can also give you good returns. But at least a fair idea you would get whether you are buying an expensive company or cheap company. But whether this company deserves being expensive or not, that's a different story which we will take it out through fundamental analysis. So Amazon we have seen, this one we have seen, Microsoft 25. Okay. Then let's see Facebook, Metaverse, Meta share price. It's going down like an hell. P ratio is just 8.88. So looks very attractive. Likewise, Caterpillar P ratio is just 15.73. And then let's see one last company, Uber. No P ratio. When a company does not have a PV ratio, it means that company is operating in losses. Alright. Yet I would be buying this company. In future, I have a plan to buy this shares of Uber among all the IT stocks in America because future projection is good. Company has been only burning cash to acquire customers. Now all the marketing is done. Uber has now become part of our life. It has taken the space in global mobile users. So it has also become an habit for us, like to travel in a car, we just go into Uber or Ola, book a cab, take a ride. So this lifestyle change. Now if you see, there is hardly any discount in Uber Ola. They have been giving it till the pandemic time. Post pandemic, they have stopped giving offers. In fact, they have become very expensive. Yet people are hiring cab. So the real profit is now going to come. So how do we decide that? Through some other, there are fundamental analysis, not just one ratio. There are so many things that you have to look for. And I told you, above all, what is most important is who is the jockey here? Who is running this company? First find out about that guy. That guy has to be super talented, then he can even take out a ship which is sink into water. Like I told you, Steve Jobs, how he has taken out Apple from totally debt trap. There's another advantage of investing into US based companies. I've been telling you that investing in India's growth story is more important, at least at this stage. But if America market continues to fall, like say Metaverse from 380, it has already down to 93. If we are getting it for 70, then why not? Likewise, there may be a lot of companies available at compelling valuations going forward. The advantage of investing in American companies is that you get approximately 5% return on dollars every year. It may be more than that. What it means is that if you have invested $1 lakh in American companies today, if the price remains the same even after 1 year, yet you would make this 5%. Why? Because dollar from 80 would have gone to 84. Dollar from 84 would have gone to 90. So in Indian rupee terms, you would have already made 5% return, though the prices did not go anywhere. Point number one, advantage one. Second advantage, some companies like say Caterpillar, like that there are many companies. In Google you can search high dividend yield Nasdaq companies, high consistent. I'll talk about dividend later. So dividend yield of some of the companies, say Walgreens, Boots Alliance, Intel. Intel is giving an attractive dividend. Okay. Crafts, Hinge. So Broadcom, Gilead Lines, Comcast, approximately you can make 3% only on dividend. So altogether you are making 8% even though the prices are not moving anywhere. It is like a fixed deposit return. Kind of sure shot. And if the prices appreciate, then that is another advantage what we get. So you are able to make risk-free 8% return plus over that whatever the stock appreciates. So these companies will not go to zero. If you continue to invest in these companies for 8 years, if you compound it, the investment becomes free. Can you believe it? For 8 years, if you continuously remain invested in these companies with the compounding effect, because first year you get 8%, next year on 8% you get 8%. Dollar from here 80 it may become 84, next year from 84 5% you have to take. And I'm saying 5% being conservative, it has been 6-7% actually. But whatsoever, things look as such that in 8 years your investment becomes totally free. That is a margin of safety what you get investing into American companies. But it is good enough right now because the prices have already fallen a lot. But even then I would say for this decade belongs to India. When time of uncertainty comes, when there is a kind of saturation in India, when there is political uh, instability, then this option opens up for us to invest into quality American based companies where your stock market cycle, sector analysis, all these are in your favor. All right, let's get back to the fundamental analysis. So wonderful. Yesterday I had given the work. Praveen has done it really well. So 4-5 companies he has compared, and I'll be sharing that chart also. Let us quickly see through. This will give an idea whether IIFL Finance is an attractive investment or not at the current market price. It's just trading at a P ratio of 12. There's good dividend yield also. The price is already at a lifetime high. We recommended somewhere here. We bought it at the bottom. Okay, in my WhatsApp group if you see the recommendation. Till this loads, write down the next two ratios. To understand the balance sheet, you need to know what is assets and liabilities. Assets, liabilities, and equity, also called as net worth. Both are same. These three figures are very important for us in order to understand the balance sheet of any company. There are two things that you need to check for any company while you are doing the quantitative analysis: the balance sheet and the profit loss report. Profit loss report will tell you the working of the company. Balance sheet of the company will tell you the margin of safety. So we want to be double assured. There should be margin of safety. At the same time, there has to be phenomenal growth in the company. Assets is the total worth of all the properties the company has. That includes even loan. Loans are also called as debts or liabilities. In other words, if I can say, if the company is liquidated means totally sold off, what will it get out of sale? If the company is liquidated, that means if the company is totally sold off. When the company is sold off, every property of the company is to be sold off. The car, furniture, chairs, stationery, land, building, then maybe they might have done some kind of fixed deposit, may have invested into mutual fund. Everything, every part of the asset has to be sold off. Then what would be the company get? That is also called as assets. This is post depreciation. Like means company may have bought the car for 20 lakh, but after 5 years the value would be only 10 lakh. So company will take only 10 lakh under consideration in assets. Company may have installed 100 ACs by investing some 30 lakh, but then because of depreciation the value would be only 10 lakh. So in assets they'll only show it as 10 lakh. That means after selling that, what is that they would get after depreciation? That is only the total assets. So assets is nothing but total properties a company has got. With an example it will be more clear. Then comes liabilities. Is the total loans or debts outstanding, short term and long term. Net worth is the net properties, the net assets after so how is the equation? Total assets is equals to net worth plus liabilities. Example, Mr. X starts a cement factory with 100 crore investment and 50 crore loan from bank. So total assets is 150 crore, debt or liability. Quickly note down. Very simple ratio. Hope there is no confusion here. So Mr. X starts a cement factory with 100 crore investment, and he takes another 50 crore loan from the bank to make a big factory of worth 150 crore. So the total property of Mr. X is 150 crore. So don't take it as 100 crore. Total properties, total assets is 150 crore. It includes loan also. Within this 150 crore, 50 crore is loan, 100 crore is his net worth. His net worth means his own investment. Or what is that he will get if he sells it off. That is called as net worth. Hope the point is clear. Now, you may find several companies available at a very compelling valuation. Example, Kingfisher Airlines. Just for 100 rupees, you can buy the company. Which has, even today, at least 100 aeroplanes. What is the logic here now? Today, if you want to buy Kingfisher Airlines, you can just go to Supreme Court and tell them there is already NCLT case going on for the company. You say that I would want to buy this company. They'll allow you to buy even for 1 rupee. They are ready. Everybody is ready to sell to you. Clear mandate. No one is there to object. Now, how does it sound? Buying Kingfisher Airlines just for 1 rupee, and then what you can do? The company becomes yours, 100% yours. All the shares are yours now. Shares are trading at 0.000001 paisa. So at 1 rupee, you have bought all the shares of the company. And when you buy it, then you can take your own decision because it becomes a private company. What decision you will take? Whatever the aeroplanes, that 100 aeroplanes at least are there, it's more than that. You sell it all. 1 crore, 10 crore, 100 crore, whatever the value may be, auction it, that's it. Sell to some other airlines. And all that money is yours. Then why is that anybody is not able to buy? The deal looks so good, the company has got properties worth 1000 crore and they are ready to sell it for 1 crore. Why people are not buying it? Because the problem is when you are buying this company, even the debt will also become yours. Company has got 2000 crore assets. In that 1800 crore is loan, 200 crore is a self investment. What you will be getting out of selling is 1000 crore. And if you get 1000 crore, the rule of any country states that when you sell off any company, the first money will go to the loans. You have to clear all the loans, then only if anything is left, you can carry with you. 2000 crore is the loan, and what you're getting is 1000 crore. The banks itself will not get full money. What will you get? You will not get even 0.1 rupee in return. In fact, all the banks will be now chasing you. Anna, now you are our owner. Please pay our 2000 crore loan. You will be in deep stress. They will sell off your other properties to recover the money. Because it is now a private company. But LLP, Limited Liability Partnership, any company that you are finding here, let's say, let us say Anil Ambani company, Reliance Communication. That company did not pay even the loans to the bank. Company already got bankrupt. It still has to pay some 8000 crore to PNB Bank. Can PNB Bank file a case against Anil Ambani and say that he has got some 100 flats in Mumbai, he has to sell all of them and then pay to me? If he files like this case, Anil Ambani only would win this case. Why? Because Reliance Communication is a limited liability partnership company, which is called as LLP. That is why against every company, even in stock market, you will find at the last limited, ICICI Bank Limited, HDFC Bank Limited, Reliance Industries Limited. Have you ever wondered why they are using the word limited? It means that whatever has to happen should happen within the company, should not go beyond company, should not come to my personal life. If I am creating one limited company, let's say Sanjay Enterprises Limited. So I may be having my personal property here and there, my house, my car, my vehicle, that is all in my personal name. But whatever the loans that I've taken with name of the company, the bank, in case I'm not able to pay the debt, the banks can only touch my company, they cannot come to me. Whatever is there in the company, you sell it off. That right they have it, but they don't have the right in my personal life. This is what is called as limited company. So here in Kingfisher Airlines, if you buy 100% share, then it is not a limited company. Limited company means it is owned by a group. So every company in stock exchange, public is the partner. So that is why if you buy 100% shares, then you are risking your own assets also. So this is the advantage of starting with a partnership firm. Alright. So always a limited liability company would be asset that you will be able to sleep well. At least you know that your personal wealth is already there. But then there's other side of the coin. Lot of big business tycoons take the advantage of it. Like talk about Vijay Mallya itself. This airlines was not operating in loss. But what did he do? He did fund diversion. Whatever the profit he was getting with Kingfisher Airlines, he was able to buy his personal assets. He bought a lot of assets in abroad. He bought a huge resort in Bangalore, Mysore Road. All diverting the funds from a company account to his personal account. There are so many ways to do it. They can take whatever salary they want. Like Sundar Pichai is taking 3,000 crore, from Google. Like that, he may be taking 100 crore. No one is there to question him. And that is a legal way to take it. A lot of illegal ways are also there. I'll tell you how. Example. Company says that, Mallya says that, he started with an airline business. He goes to the aeroplane manufacturing company and says that, how much are you going to charge me for 100 aeroplanes that I want to buy? Company says 100 crore for one airline. He says not 100 crore, I'll pay you 120 crore. Surprised? This is how this happens. 80% companies these things happen. 90% companies these things happen. He says not 100, I want to pay 120 crore. But what is the condition? You give me 100 crore bill. Alright? And then rest 20 crore which I pay to you. Take 2 crores and 18 crores, pay me back in cash. He will do, the company will do some internal adjustment and all. So the bill will be 120 crore. That 120 crore company has bought aeroplanes. But really the deal is happening in 100 crore only. 20 crore is exchanged under the table. In that there is a ratio 10 is to 90, 20 is to 80, whatever that they decide. So both are benefited, both the parties are benefited. But who is in loss? Public, because it is public money involved there, because the company listed in stock exchange. That is why people want to list their company in stock exchange. That is why I tell you, jockey is very, very important. The person running the company should be very genuine. If he is like Anil Ambani, gone case. Almost every management eats money, guys. Every management does it. But what matters is to what extent. They have come to the exchange to eat money. That's the hard truth. But how much? That is the question there. There's a company called as SEL Manufacturing. Later I'll be talking about this company. But even apart from the exchange, you create your own partnership firm, let's say. And then you want to go to abroad. You want to roam around the world. You want to travel in a luxury car. So what you can do? You can buy the car in the name of the company, but run it as your personal. You can roam abroad everywhere and put the bill in the name of the company. So like that every management is doing. They'll go to abroad for a vacation with family. But what they'll write in the bill of the book? That we have gone in abroad to do some research on the new business ventures. Where their family members are also their employees. They give salary to their own family members in crores. And if you ask them, they don't attend the company even for a day. No one there to question them. Like if you talk about Reliance Industries also, Akash Ambani, Neeta Ambani, Mukesh Ambani. Every family member is taking multi-crore salary every year. Now, I do not think Neeta Ambani must be actively working in Reliance Industries. But still, she gets huge crores of salary. But that is the hard fact. Every company does that. But it doesn't mean that the company is bad. They are taking, but they are not taking 1,000 crore. No? Like that, you need to think. And you want something very pure like milk, you won't get here. Market, that's why they say it risky. Every management is very greedy to make a lot of money. But be with the management who is greedy at the same time, who is generous also. He eats and he gives others. He gets 100 crore, he will eat 10 crore, 90 crore he gives to others. He eats 50 crores, 50 crores he gives to public because they have trusted him. So some managements are there, like say the best management what I like, I am fond of among all the companies is Azim Premji, Wipro. Management should be like this. I always give an example. Azim Premji has already pledged 90% of his wealth for charity. What will he eat? Tell me. He himself has committed his personal 90% wealth for charity. He was once the richest person in India. So that is how the company has to be. That is how the management must be. Then we can blindly trust the company. Tomorrow, if Azim Premji starts with a new company, I would be rushing to buy it. Alright? So understanding the balance sheet is very important, which will tell you how much is the company floating on water. Is it 10% already underwater, 20% underwater, 80% underwater, 90% underwater, or is it flying in air? There are companies which are totally debt free. That means company do not have any loan. You may be surprised by the big names like Infosys, TCS. No loans. Debt free companies. Like that, there are plenty. They may have taken short term loan, that may be only 1-2%, but that can be paid in 1-2 months also. What happens is suddenly they find a very good building, so they would want to buy for once, but they do not have enough cash flow, so they'll buy it, and within 2-3 months when they get the profit, they'll clear it. So virtually there's no loans in these companies, debt free companies, and you'll be surprised by big names like Apple, debt free. 150 lakh crore company, debt free. In fact, it has got a cash balance of 20 lakh crore, I think. Let's see how much cash Apple has got. That shows you the margin of safety. $62,639 million, which means that 6,263 crore dollars into 85 lakh crore. 5 lakh crore is only the bank balance cash. Forget taking loan. He is in a capacity to give loans to others. So like that, you have to go into the DNA of the company and find out everything. Then why will you lose money in the market? Tell me. Blindly you are going and buying into any company just because your friend has recommended or you have seen in a television channel or newspaper. That is where you get trapped. That is the biggest mistake you are doing. That is why I always say, do self-analysis, do self-reading. Only then you will discover the unknown. And unknown stocks only give you maximum returns, not known stocks. Buy the stocks which others haven't bought. Yesterday I've already given you an example of free float. When the company's shares under circulation is with least with the public, the operator will try to inflate the price. So management is good, then the number of shares in the market is less, the ratios and all fundamental analysis tells us that the company is at a compelling price, we go for it. One such example I told you is IIFL Finance. It's an amazing company, both management wise and everything. Now look at the peer comparison also. So this is a work done by Praveen. HDFC, it's a finance-based company. Current price is 2,448. Market cap is 4,44,000 crore. This is the net profit for the last 12 months. So P ratio is 29. PEG ratio, I told you PEG ratio, how much less it is, how much close it is to zero, that much better it is. How much less it is, that much better, but not negative. Negative means the company is operating in loss. Okay. So there is a negative growth in AU Small Finance. Cholamandalam Finance 0.99. This is only rightly valued. This is also rightly valued. Bajaj Finance and Cholamandalam. But other companies look very expensive. But when I compare this with IIFL Finance, it is only trading at 0.25, which is much cheaper compared to its peers. There's still a long way to go. That means according to its group, its price today should be 1600. But I told you we will not be waiting for the full target. We will be waiting only till the 0.5 PEG ratio. Even then the price has to be 800. Today the price is only 420. Yesterday it rose a bit. 10 rupees it rose yesterday. So slowly and gradually the price has to climb up from here. Okay, may take some time, but eventually the average of mean has to come. Things have to get normal. So just wait for some time. At 116 rupees it was a compelling buy. That's why I recommended. So even at this price, you are still holding it. I'm having a lot of shares of it. See. This is in one account. There's other account also I have. These are all the companies in this portfolio. IIFL Finance. Okay, not in this. Here we have Equitas. Even Equitas is very good, guys. 3,880 shares. Alright. So the shares have been pledged. If you see the balance and all, it shows as negative. Okay, negative. So whatever that the holding that you have, you can pledge it at just 8% per annum. So I've done that to buy some property near your Mumbai highway, so beyond your Sangareddy, Sadashivpet. So IIFL Finance shares have been pledged. While you pledge it, just at 8% you'll be able to take out the money. But what has been my purchase price, that you can see here. So this is still unbooked. Okay, how many? 4,019 shares I have got. There's other account. Now this will show you from the day that it got pledged. Okay. So already I have invested 12 lakh only in IIFL Finance, guys. Whose value today is 17 lakh at a profit of 4.76 lakh. So that conviction is there that we shouldn't, this is mark to market again. Okay. The conviction is there that we have to still hold on to it. Why? Because we know the working of it. We know what is the true value that this company deserves. So why should we be in a hurry to sell it? So this fundamental analysis will tell you till what time we have to hold. If the price goes to 800, then I would sell. But let that price go there. It may take 3 months, it may take 6 months. If it takes 1 year, then again we are going to review and see whether the price 800 is justified or it should be 1000 rupees. If the company is still growing with the same speed, then we may wait for even 1000. So fundamental analysis will tell you what should be the price range where you should be thinking of exiting the company. What should be the price range where you should be thinking of entering into the company. Then exact price, exact sell, that technical analysis will tell us whether this company deserves to come in our watch list or not. Firstly, filters have to be used. In these 7,000 companies, whether a company fits for me to buy or not. If the company is risky, forget buying. We will not be looking at anything in that company. No technical analysis, no fundamental analysis needed. First of all, company has to be cheap among peers. HDFC may be a great business, but the value is not cheap. It's like buying a property in Abbots. Property is good, no doubt. But whether you'll make money from that property or not, we don't know. Because you're buying it very expensive, from there the price has to shoot up further, chances look very less. But yes, you buy some far away in the outskirts, some agriculture land and all, yes, price is likely to shoot up. May take time, but likely to shoot up. So that is why I always prefer investing into penny and small cap stocks where there is enough margin of safety and it is undervalued compared to the peers and has some kind of monopoly element. These are the best ingredients to multiply your money in any stock. Alright. Now coming back to the working of the company. The rule of the market says, first write down. Quickly note down. So profit loss report is another thing which is very important for us. You may find two tabs there. Earlier I told you that always look at consolidated. Now you'll get to know what is the difference between standalone and consolidated. Standalone business is the core business. Whatever is the main business of the company, that is called a standalone. But in the years of running the business, company may have accumulated a lot of money. Like say Reliance Industries in the last 20 years, 30 years that it was operating, it has made huge wealth. With that wealth only he created smaller companies like Jio, Reliance Retail. Retail includes your Reliance Fresh, Reliance Trend and everything. Reliance Optic Fiber, like that, so many companies he created. Reliance Textiles. So core business is standalone and all the business together including core business is consolidated. So consolidated business will only give you the true picture of the company. Some companies like say Castrol does not have consolidated business at all, only standalone. That means the company did not invest into any other business. That is what it means. There are so many companies where you'll only find standalone. See here, when I click on consolidated, I do not get anything. Only for standalone we are able to get. So hope it is very clear that a standalone business is only the core business, consolidated is mixed business. Some companies which do not have consolidated, it means that company is only running a single business for years, years and years. Does this mean that the management is bad? No, definitely not. Even Mukesh Ambani would have done the same thing to continue with the same core business and make it very big like Saudi Aramco. Saudi Aramco is 150 lakh crore company, oil and gas. But he saw that oil and gas does not have a future. That is why he ventured into other business. MRF Tires is only standalone. Only tires business he has been doing right from the time that it started. But still it is a great company. The price of MRF used to be 30-40 rupees. Today it is 90,000 rupees. So do not come under a judgment stating that consolidated business is good or standalone is good. No. There is no such rule that standalone is good or consolidated is good. It is just that you should know what is the difference between them. Now coming to the profit loss report. Top line, also called total turnover or total sales. For any time period, it is the total income earned by the company. So in profit loss report, the first thing that you need to check for is the top line. Top line is nothing but the total turnover or the total sales or the total income that the company has earned during the stated time period. So we'll take an example of one company, let's say Hero Motocorp. Hero Motocorp is the biggest two-wheeler company in the world. By the number of sales of two-wheelers, Hero Motocorp is number one globally on this planet. So where can we find the profit loss report? If you scroll down, you'll be able to see it. So standalone, core business, consolidated, mixed business. So Hero Motocorp has invested even in Ather Energy, the electric bike maker. Like that, everything will come in consolidated. So here, if you see in detail, you can click here on profit loss report to see it in detail. Every year, you can see every quarter also. For quarterly reports, you have to go back there. Let us see the yearly report itself. March 2022, this is all in crores. Huh? Company has done a total sales of 28,687 crore. Company has done total sales of 28,687 crore. So all the bikes together for that year and all the mixed business together, this is the total sale value which has come into the account of the company. Company's firm account, this much of revenue was seen in their bank account. So in that they have to pay the excise duty, the service tax, but all that got removed once we had the GST. Okay, so there is no GST here. GST would be paid by the distributor, then dealer and all that. Revenue from operations net. That means post this taxes, what is the total revenue? Okay, we'll see consolidated. So post this revenue, because they are not paying any kind of excise duty and all that, that got all scrapped off once we had the GST in the year 2000. So this is the total revenue what company has got. 28,977. Total operating revenues. So within this, whatever the difference that you find is a GST element, where company may also be involved in trading. How it is involved in trading? There are company authorized service centers who are selling helmets, selling jackets, and doing the servicing of the bike, selling spare parts. So that difference is nothing but the GST component. So net on net, company after paying to the government GST has made this kind of revenue. Then company also did some miscellaneous business. What is that? Maybe company has sold some helmets, or maybe keychains, maybe spare parts, or maybe they have got revenue from the service centers. So that all gets added up here. Apart from selling bikes, what are the other business company has got? So 30,106 crore is actually the total revenue which has got credited to the company's bank account for the financial year from April 1 till March 31st. April 1, 2021 till March 31st, 2022. This is the story. But to do this sale, it must have also purchased some raw material. What is the raw material here? Here, lamps, tires, chains, wheels, metal, color, side mirrors, whatever is required to make a bike, he has purchased all that raw material. So that has been 20,845 crore. That is a bill which company paid to purchase the raw material. Then comes the changes in the inventories and the stock in trade. Changes in the inventory in the sense what? Here, first of all, purchase of stock in trade. That means something he bought in order for trading. Buy it at low price, sell it at high price. Example I told you, helmet and all those things, spare parts and all. Then changes in inventory. Whatever the company has got, let's say he has some 10,000 bikes unsold, but because of inflation, the price slightly increased, then this value will increase. But because of old technology, the price reduced, the company is selling at a loss, then this will be negative. This is how they adjust whatever the inventory that they have got. Employee benefit expenses. This includes even salary. So company must be paying salary to its employees. Company must be rewarding them during Diwali with a gift. Company may be rewarding with a bike. So whatever what they are spending on employees, everything will come here. Company may be sponsoring trips also to them. Company may be sponsoring insurance also to them. Everything will come here including salary. Then they may have taken loan from the bank. 53 crore is only the interest cost what they have paid. Depreciation and amortization expenses. Company may have taken, maybe having some cars with the management. Company may be having ACs. Company may be having machinery. These machinery values will reduce with time. So every year they will be reducing it by 15%, 20%. There is a standard slab mentioned by the economists and all. Accordingly only you can depreciate it. So there is a loss of value of assets, mainly electronics. and vehicles, which is 690 crore. And other expenses. Other expenses may include your power bill, may include your rent, may include your transportation cost, may include a fire in the factory. Everything will come here. So this is the total sales company has got, and this is the total bills from the company. So the difference is nothing but the profit. How much it is? 3,257. So in a year, company has made a profit of 3,257 crore, even after paying the EMI and everything. But then they have to pay the income tax. Income tax has been 805 crore. 25% is the income tax. But you can review this tax till 1 year. So last year, deferred tax means what? Last year they paid an excess tax. So 76 crore they are deducting from it. So you have a provision to do readjustment of the tax till 1 year. Sometimes it will be plus, sometimes it will be minus. If they have paid less tax, they have to pay later. But if they have paid high tax, then they can get a cash back. So altogether tax expense has been 730 crore only. So among this one they have to pay to the government. There's no question to be asked. So 2,528 is actually the profit what the company has made, which is their own. After all the expenses, after all the salaries, after all the EMIs, after paying the tax to the government with GST, this is what is left over with the company, which company can do anything. It can pay dividend to the shareholders, it can think about opening one more factory, it can do fixed deposit, it can buy shares, it can buy mutual fund. It is all the liberty of the company. It can give loans to others with this money, or it can come up with a new launch. Anything can be done. Only this amount company has got the control. Alright, now write down. So top line is clear, total revenue is nothing but the top line. Then second you have the operating expenses. This doesn't come. Interest second loan doesn't come. Very important notes, note it up. Operating profit margin will tell you whether company's product are well priced or not from company's point of view. If any company's operating profit margin is less than 10%, I don't even touch it, guys. We do not want to invest into any company which is working for 1, 2, 5, 10%. That means the company's product is not extraordinary. We want to remain in a company whose product is extraordinary. Think now, take here an example of Apple. See here, this is a net profit margin. So operating profit margin will be nearly double. 30%, 40% nearly operating profit margin what Apple is enjoying. That is why he is able to sell a mobile for 1 lakh which is manufacturing for 30, 40,000. That is the kind of companies we should be owning. Domino's Pizza, 30% operating profit margin. Let's see for Hero MotoCorp. Hero MotoCorp is also a great company. But let us calculate the operating profit margin. It may not be that great. Where did we miss that? So how much is the operating profit? It has got 3,257 divided by 30,000. So let us quickly do it. 3,257 divided by 30,100. 10.8 into 100. Only 10.82%. So note it down here. So that's a very less margin. And if you ask me, sir, in 7,000 companies, how many companies have got an operating profit margin of more than 20%? The answer is less than 500 companies. So it means that 90% companies do not come into our watch list also. We do not want to touch a company whose profit margin is less than 10%. Alright? Even a company like Hero MotoCorp may be the biggest two-wheeler company in the world, but it does not have the pricing power, maybe because of competition from Bajaj Auto, maybe from TVS Motors, maybe the electric vehicle revolution. We do not know what is the reason. But the company is, if it is increasing the price of the bike, is not able to do the sales. This thing is very clear from his profit loss report. Only if company is giving some discount or is having a price lower, then only is getting the sales. I don't like such business. Right. Let's see another company, Castrol. This is also a debt-free company. 4,000 crore, okay, turnover. In that 3,000 crore is this one. So 1,029 crore is what they have made. Look at this amazing operating profit margin. 1,030 divided by 4240. 24%. So which is clear an indication. You can yourself also see it. An oil dabba, 1 liter, it will cost you 300 rupees, where the name Castrol is there. That only if you take it from drum. There are a lot of small vendors and all who give it in open market. That will be only 50-60 rupees a liter, and this is 300 rupees a liter. So mechanic will tell you, I want only Castrol. When the price was 170, also used to say that. Even at 300 rupees, it says the same thing. So company is continuously increasing the price, yet it is able to get more sales. That is the company that I love. But I would not be investing into Castrol. For this, you are going to answer me tomorrow. This is a homework for you. Why I would not be investing in Castrol when the company is debt free and it has got an amazing operating profit margin. What may be wrong? Management is also excellent. Let me tell you this. So far doesn't look anything bad, but yet I would not be buying. I will not be doing research also about this company. And you will tell me the answer tomorrow. That's all for today, guys. Any questions or doubts, make use of the chat window or the audio control.